First of all, great meeting you all. I mean, thank you for having an interest in this topic, crypto mining, something that you hear, I think, from time to time, but it may not be as sort of visualizable as the sort of traditional mining. So I wanted to bring this topic to you today in order for those of you who are interested in crypto. And then, if you're talking about finance and we're talking about primary market side and the secondary market side, basically equivalent of the primary market side of how the crypto business happens. So today, as part of my what is mining, what is crypto mining, I will be covering what is actually mining in this case, because it's not like you take the scopes and the shovels and then you start digging a precious metal from underground. It's a little different kind of crypto mining. And if you just want to kind of visualize what the mining field looks like, this is what it looks like. You have a lot of some machines in a very big building doing something. That is the crypto mining. And then specifically, I'm going to focus on Bitcoin mining. And then I will tell you why in a little bit, why we will focus on Bitcoin mining and also different ways you can mine them. So what is crypto mining? We very casually use this word crypto mining, Bitcoin mining in a day-to-day language, especially if you are even remotely involved in the cryptocurrency. But it's really a process in which machine performs certain tasks to obtain a little bit of cryptocurrency. So as I was saying earlier, when you think about the traditional mining, where you are mining silver and gold and platinum and things like that, you literally go into a cave, the ground where all these precious metals and other things are kind of buried under, and you start digging them up, right? Crypto mining is a little different. It's just a little process that you go through. And different ways you can mine them. It's the picture that you saw on the first page is, I'm gonna take a step forward and say ASIC mining, application specific integrated circuits. At least for the Bitcoin, this has become the most standard way of mining a coin, because in order to mine a Bitcoin, you have to solve a very complicated mathematical formula. The mathematics itself is very simple, but you almost have to kind of guess a astronomical combination of the numbers as part of it, which means that you actually consume a lot of electricity. So if you're doing it, if you're trying to guess something on your computer manually, you can never get there. So there are machines now that are designed just for the crypto mining, Bitcoin mining. It's expensive. You can get somewhere around 500 or so machines, 100 or so machines for about $1 million, give or take, in today's market rate. But it's definitely far more powerful than just using your computer, right? The CPU or the graphic, the GPU, and up to 100 billion more times mining power than the CPU. So if you don't have ASIC, you probably wouldn't be able to mine any Bitcoin today, because the ASIC owners, first of all, have a lot of them, and each machine has far more mining power. So they will take whatever you might have been able to get 10 years ago when people are just beginning to mine Bitcoin. Other ways that you can mine are cloud mining. Basically, you pay someone probably who has a huge factory full of ASIC machines for an agreed term, and get a benefit out of what comes out of that setting. So there is no need for you to set up your own mining rigs. Mining rigs is what you saw on the picture. I mean, in the picture a couple slides ago. That thing is called a rig. So there's no need for you to set it up, because you pay somebody to buy the rights to own a part of that rig, and then you get the benefits of it. The CPU way of mining is use your computer processor. It's probably not going to provide enough power, especially today with the mathematical formula getting longer, more complex, and the ASIC guys basically raking away everything. So if you will try to do CPU, you probably will burn your power right away and then damage your computer pretty much. Or you may not be able to get anything at all. The GPU, the processor, motherboard, cooling, and then a few video cards, it's less investment than ASIC, more likely to harvest something than CPU. But still, I mean, if you're going against the thousands of millions of ASIC machines, then you may or may not be able to get much. So those are the things that you might want to consider. I mean, if you're just curious to find out a little bit about Bitcoin mining, maybe you can start with CPU, GPU, just to kind of get a feel of what it's like to be in the mining business. But if you're really serious about mining, you probably don't have too much of a choice nowadays, but to actually start getting into buying ASIC machine and start setting up your rig, or at least being a part of a rig in one way or another. So let's talk about Bitcoin mining. First of all, take a step back and then let's talk about what is Bitcoin. Right? Bitcoin is a cryptocurrency that was created in January 2009 by a guy or woman or group of people, or maybe some kind of a very powerful artificial intelligence out there that is able to think on its own, started by the white paper commonly known as Satoshi Nakamoto. So that paper, very short paper, like 11 page long, started this whole cryptocurrency thing just 13 years ago. All Bitcoin transactions are verified by massive amount of computer power via a process called mining. So this is what I was talking about on the previous slide. That nowadays the use of ASIC machine has become the norm, and in anything else, either you're going to be maybe burning your processor, or you may not even be able to get to a place where you can actually mine a coin. Many cryptocurrencies were created after Bitcoin. Just to give you an idea, on the coin market cap, they today are listing almost $2 trillion worth cryptocurrency. There are about 20,000 of them. But about 40% of the trading volume comes from BTC, the Bitcoin, and another 20% from Ethereum. So of the 20,000, almost 20,000 coins that are listed on CoinMarketCap, about 60% of the market cap comes from the Bitcoin and Ethereum, two coins. The other almost 20,000 coins make up the other 40%. So you can imagine how much concentration of a volume exists within these two coins, especially in the Bitcoin. So if you're interested in cryptocurrency, and if you feel like digging into some of the presentation that has been done previously, please refer to my other presentation. Let's have a hard look at blockchain for some aspects of blockchain itself, because that also provides you some foundation, the basic information about the blockchain and the cryptocurrency. I already kind of covered a little bit, but let's just talk about why Bitcoin. So the stats that I have up there was taken when this presentation was put together. So it's about a month ago. Since then, already the market cap has gone up about by $100 billion worth. Of course, market cap gets affected not only by how many coins are there or how much of each coin is coming into circulation, but also the price of a coin. So as the market goes up and down, even if nothing else changes, market cap obviously changes. And as I said, about 40% is Bitcoin and then 20% is Ethereum. So that's what you see in front of you, the Ethereum being about half of Bitcoin, but those two together is taking up about almost more than half of the whole market cap. Also, though, I mean, when you talk about which coin do I want to focus on? It comes down to spendability or usability, the use case, right? So most retailers do not accept cryptocurrency as a medium of payment yet. But payment systems like Square and PayPal began to take some cryptocurrency, starting with Bitcoin. And interesting thing is, as I said, and I work in the cryptocurrency industry in a small company, so I get a call from one of those co-working places and places like that from time to time. And then one time when WeWork called me and said, would you like to start using our facility? We will take the payment in Bitcoin or fiat. That was very interesting to me because, if I were to take some cryptocurrency payment, I probably would choose to take it in a stable coin first. Stable coin is the coin that is out there that is a one-to-one. There's a one-to-one convertibility between the in most stable coin cases, one-to-one with the US dollars, right? So I don't have to worry about foreign exchange risk or anything like that. But because Bitcoin is has the biggest, by far the biggest market cap in the cryptocurrency industry, most people out there think about Bitcoin first ahead of anything else, regardless of, let's say, ease of use. Let's say ease of use from the point of view of manageability, right? From the managing point of view, like I said, a stable coin, because it's one-to-one with the US dollar. For me, it's much easier one for me to take, because then once I take the payment, I don't have to worry about market going up and down and changing my accounting value, right, of my business on a day-to-day basis. Store of value and an investability. BTC and ETH are now commodity, at least in the US, as per CFTC and an SEC, right? So the different regulations apply to these two currencies. The rest of cryptocurrencies, there's still a lot of debate ongoing. Still, the regulatory body is unknown. Is this private equity? Is this currency? Is this also going to be commodity? For the time being, I think the safest thing, although I'm not here to make any kind of investment advice, nor the regulatory advice, as I'm not an attorney, nor the investment advisor, but I think the safest thing to probably assume is that this could become one of those regulated assets, maybe private equity. So that's something that you have to keep in the back of your head as you start maybe possessing some of these cryptocurrencies. We are beginning to some derivatives starting with BTC. So we have some funds out there. We have some futures. We may have some options. It's not all on the centralized traditional exchange, but if you don't mind where you take your money to and start putting some money into the derivatives form, then there are some derivatives that are beginning to form around the BTC, and then to a certain extent Ethereum, the Bitcoin, and then to a certain extent Ethereum as well. So now let's talk about Bitcoin mining, today's main topic. So as I said earlier, it's a process by which the new Bitcoins are entered into circulation. So just like just like a money, right? Until it gets printed and then have some kind of physical form, it cannot circulate in the economy. So the Bitcoin mining is the equivalent of Fed printing the US dollars, for those of you who are in the US. And nowadays, as I said already a few slides ago, most people use ASIC to do the mining as opposed to their own computer or some kind of graphic card, because that's the most efficient way to mine, and could be possibly only the way now that most of the people use ASIC machines. And that's so powerful that if you're trying to beat these ASIC machines with just your computer, trying to beat them at the speed of solving the puzzle, it will be very challenging. People conduct activities of mining in order to receive the incentive. So that solving the mathematical formula or the puzzle by itself is an act to create the Bitcoin, but by being a part of that puzzle solving, when you solve it, and then if you're the first person to solve it from the blockchain system, you are rewarded with the Bitcoin for being a part of that community. The miners or the computational work that nodes in the network work to verify the legitimacy of BTC transactions, making sure things like double spend does not occur. So part of that puzzle that you're solving is that you're taking a part of that puzzle so that all the activities that take place in the Bitcoin blockchain are all legitimate. And the first person who can say, yeah, the most recent activity that we see that took place, that's legitimate, good to go. The first person who can fit that puzzle is the one that gets that little reward from the system. The process releases new Bitcoin into circulation after that puzzle takes place. So the reason we call blockchain a blockchain is because, let me just take a slide back, and then this is going to be, I mean, there will be illustration of this explanation, a little bit more visual one on the presentation that I referred to earlier, the blockchain introduction to blockchain presentation. But basically, you are a block. When you're solving a puzzle, you are trying to make sure that that block is a legitimate one. And when you solve it and the block becomes legitimately a part of that blockchain, it forms a chain after the most recently solved block. And hence it becomes the blockchain, right? That's the name. That's really why it's called blockchain. The Bitcoin pool. So how much Bitcoin can we harvest out of the blockchain universe? There's a cap of 21 million maximum. This makes it different from some other blockchains and distributed ledger technologies where they may not have maximum, and the owner of the blockchain, that particular blockchain, can continue writing or releasing the new coins into system. There are a lot of projects out there that have the max that can be released. Blockchain is one of them. Bitcoin blockchain is one of them. And then there are some that don't have that limit number. But as for the Bitcoin, this has become also very valuable from the get-go because we knew that it had a maximum amount. Already about 19 million in circulation today. So the rate of mining, as you can imagine, goes down every time because every often the what we call halving happens, releasing much less and less Bitcoin out there. So every 210,000 blocks, the blocks that I talked about, the block reward is halved. Current block is 6.25 BTC. So when the next halving happens, which is, I think, about 2 years from now at the current pace, then it's going to go to 3.125. And every 10 minutes, the pace is very constant. So every 10 minutes, miners are able to win a block, whoever solves the problem first, as I said earlier. So that's what consists the Bitcoin pool today. So solving for difficult math, I mean, this is a conceptual thing, but you see that there's a target of what one is solving for, and just solving it first, but with the wrong digit is not going to help you, right? So there might be a few disqualified ones coming before the viable qualified answerer comes into the picture, and then that viable person, the third person in this illustration purpose case, wins the blockchain. So I mean, it's you can tell that there are many digits that make up the puzzle, And so you can tell that this is not something that you can do in your head or just on the paper, and then you can start scribbling and you can get your number to a viable, very close, slightly under number from compared with the target number that you're trying to go for. So mechanism of mining, proof of work, which is the Bitcoin. So if you hear mining, proof of work, I mean that's the process, or that's the system that we use that that mines the Bitcoin today. So what does that mean? It's a decentralized consensus mechanism that requires members of a network to expend effort solving an arbitrary mathematical puzzle to prevent anybody from gaming the system. So because there are thousands of millions of people or machines trying to solve the same puzzle, right? And then unless the majority consent that, okay, we agree with you, it's not a right answer. It's not considered the right answer. So basically, it's very difficult to game this kind of system because it's very difficult to go against that kind of number of people, right? I mean, what are you going to do? I mean, are you going to bring in even more people on your side and then try to counter what is the right answer? Such mechanisms allow peer-to-peer transaction in a secure manner and skip the need for trusted third party. This is really not just about Bitcoin, but this is really one of the powers that blockchain technology can provide to any system. So let's think about, let's walk away from the mining a little bit and then talk about any industry that has a lot of middlemen, right? I mean, it could be the banking, it could be the supply chain where you might have a lot of people in between yourself and in the bank itself, right? When you go to bank and then you take out the money from your bank account, it's not like you are actually dealing with the bank itself, right? I mean, there are like systems built, and there's like a Fedwire, everything like in between, and there's a clearinghouse, and all these like in between systems and people that are kind of built into the system. Blockchain, because there are people who are doing that kind of securing of the transactions. If I come in and then I buy Bitcoin from you, or I send something out, it becomes a real peer-to-peer activities without having to worry about the legitimacy of the transaction, because it's noted on the blockchain, it's recorded, and you cannot try to reverse, right? Or you cannot try to cheat the system. That's very difficult. So that really allows the peer-to-peer transactions. But of course, the blockchain today requires a huge amount of energy. It requires a few $1,000s worth of electricity to just bear a Bitcoin, which is something that the blockchain technology still inherently has, and something that we need to improve. Other mining methodologies emerged as a result. As a result of this huge energy requirement, and to simplify or to lower that kind of resource use, other methodologies emerged so that it becomes a little cheaper, a little even simpler. The one that is becoming more and more mainstream, to walk away from the proof of work, but to make it less energy required, a little bit more resource less kind of system. It's called proof of stake. So if some of you are in the Bitcoin, some of you are in the cryptocurrency field, you may have heard of a phrase, staking. That is what the proof of stake is about. So it's more about consensus mechanism. And instead of these people with the expensive machines trying to solve a problem all the time using a lot of electricity, the central figure of that particular technology, and when I say central figure, it's not necessarily a person, it's the system, it's how the system is built. It randomly assigns the validators who are responsible for checking and confirming the blocks. So you become a part of the node. You have a certain number of cryptocurrency that are required by that particular staking technology. You become a node, or you become a part of that sort of you make up a participants. And when you're randomly picked to say, okay, can you tell me if this is correct? Can we move forward with this? Conceptually, that is what's happening. And then if the node or this like member line says, yes, that's fine. And because you're randomly getting picked rather than kind of have some kind of systematic way of getting picked, or everybody is taking a turn every time, the legitimacy of these no's as randomly picked, selected to say yes, no, saying, giving the right answer to the system is taken as the proof. So that is the proof of stake that is beginning to take over the proof of work today. And there are other proof of XYZ that is beginning to emerge. And one of the projects that I'm very deeply involved with today that is proof of something is proof of coverage. So it's currently helium specific. And what happens in that network is a challenger, transmitter, witness randomly assigned role people are communicating with each other in order to produce a helium coin. But there are, give or take, 20 different types of proof of something that is beginning to emerge in order to overcome the challenge that the original Bitcoin blockchain presented to the blockchain world, which is a very, very high resource cost that it has to bear. So this is basically, the very sort of basic understanding of what the Bitcoin mining or the mining business consists of. And I know that this is very difficult, just hearing it on the presentation. And then if you've never touched the cryptocurrency before, or maybe you have been a part of the blockchain industry, so to speak, but have not done the mining before, it's very conceptual on the paper. And a lot of things just kind of flow over your head. It still is flowing over my head, and I'm in the industry and I'm very deeply involved with this business. So, I just want to kind of, before I start getting this to the finishing slide, I just want to stop and see if there are any questions that anybody has after having heard what I just kind of zapped through.
Let's see, how does the crypto industry justify the huge environmental impact of using vast amounts of energy, most of which is generated by fossil fuel?
Okay, very good question. Use of fossil fuel problem is, I think, something that we all have to solve. And right now, I do have to say, I think right now it's still the electricity that is coming through the normal normal electricity providers, right? But what's happening with all these people who have a lot of ASIC machines, they are beginning to build their rigs out where first of all, electricity is cheap, and then also some of them do recycle what they can. So for example, right, running all these machines do create a lot of high temperature, right? So that temperature itself can be recycled for some other things. Or if you are in the cold place and and then there are a lot of people who are utilizing the heat out there in the winter, that is a place where you can actually start recycling. So it's not just, I actually was involved with some publishing, the physical publishing business in the past. And then the factories where they do publish the books, where they print the books, they also do something similar. They actually recycle the energy. And especially in the winter when they don't necessarily need as much electricity to kind of keep the machines cool, for example, and then they kind of sell back a part of that electricity to the electricity providers. So all these, I think, innovation of how to utilize electricity is beginning to be seen out there. I mean, is it completely coming to a sort of like a fossil fuel burn zero level or emission, the carbon emission zero level? I think we have a long way to go. But I think as a human society, we need to all go there, and I think it's definitely a challenge that I think we need to continue thinking about. Great question, though.
Yes, certainly. Thank you. We do have another question. Do you know any common retail spaces where crypto is acceptable for payment? For example, like a Starbucks or a place like that?
So that one is, I know that, for example, like only because I'm a Japanese, I think a part of Akihabara, which is very well known for selling all sorts of electronic products, were beginning to take it as one of the payment. So there are pockets of places that are beginning to take it, but is it widely accepted at these retail stores? Not quite yet. So I think the best bet is to go via the bigger payment system companies like Square or PayPal, where they take it as one of the payments to clear your payment. But it's beginning to emerge. Very small though, still. Oh, and then as I said earlier, like WeWork was actually coming to me to let me know that they began to take the Bitcoin payment. So like I said, it's beginning to emerge.
Very interesting. All right, thank you. Another question we have is, how long is the transaction time in exchanges?
I'm not sure if I understood the question, Susan.
Okay. Vernon, if you'd like, can you elaborate a little bit on your question? And then maybe we'll jump back to that if that's okay. Give that attendee time to just elaborate a little bit on the question. And that's all we have for now. So if you'd like to continue on.
Okay. All right. So yeah. Okay. So I'll just kind of start talking on the closing slide, but I'd love to be able to answer the last question that we had. So Susan, just to kind of let me know when it's come back with the little elaborate. Okay. Yeah. So this is a part where the reason I bring this up is because some new technology like blockchain, a lot of people have great ideas, or you might be working for a company that might want to launch a branch of a business that has something to do with blockchain. But very often what happens is, I know I want to do something, I have some idea, I don't know how to make it happen. So this is where people, consultants and outside service providers can really help you to make sure that your ideas come into reality. So some of there are different things that we can do, prepare and moderate an innovation session so that you can get the thoughts itself started. This is something that I think, especially at the beginning, we're doing a lot of that. Educate the relevant stakeholders and then hold workshops. So this is like one step beyond that, right? The idea is there, and then there's a group of people in, especially sort of large company setting, you may want to sell the ideas, but not all the stakeholders before the branch of a business can start may not necessarily know what it means to have this, and you need a way to kind of sell the ideas. So that's somewhere where definitely can be helped. Review and bring you up to date with all relevant regulations, especially if you're going to be using this to from the financial service point of view, or want to use it to the sort of healthcare payment, things of that nature. Basically you want to use the technology in the field where the regulation is very, very heavy. That's definitely another area that actually you really want to have a help, because you don't want to start guessing things and then end up being in the sort of DC making your case. I know a lot of companies that ended up going down that route. Connect you to the right products and product developers as required. As the new technology appears, there is not necessarily enough expertise out there for you to just identify them. So that's something that can be helped. Work on governance, including policies and procedures, especially where regulations are involved, in making sure that there is a proper governance structure at the company to implement this. You definitely need some outside point of view to make sure that everything is squared in place. Review the product roadmap, there are plenty pitfalls that you can fall into. And I myself have fallen into a lot of them in the past, right? And then build a team that is required. So I'm again going to stop here. And Susan, do you have the question back or not yet?
Yes, I do. Thank you. So to elaborate on that question, he wrote, I've been informed that to complete a purchase using Bitcoin, it can take a long time because of the verification that takes place. So I guess he was asking, how long does the transaction time typically take?
Okay, so this is more about the blockchain congestion speed more than anything. So if you're just sending blockchain, let's say like, I have something to sell you and you are sending me you're sending me Bitcoin to pay for it. It's actually very fast in most of the time. But when the technology itself is congested, I understand that on Sunday, this past Sunday, the day before tax payment happened, the blockchain was very, very busy. I suspect that a lot of people were selling, those people who possess Bitcoin or Ethereum, they were probably selling some of those cryptocurrencies to write a check to pay their tax this year. So when something like that happens, more volume than usual comes into the blockchain, it slows down dramatically. And then also how much you are sending makes a big difference too. So if you're just sending a couple dollars as opposed to $2 million, that also takes a very different time. So between the volume of money that you're sending and what time of the day or like how congested the system itself is, it really varies. So sometimes it's almost instantaneous. Like you send one and then just a few seconds later, I might see it. Sometimes it might take a couple minutes. Sometimes you might not see for like half an hour. It really depends.
Okay, interesting. Thank you. I think that answers that question. We also had another question come in. So proof of stake will overtake proof of work, but will proof of coverage do the same for proof of stake? Or is proof an ever-evolving component as different blockchains emerge?
So proof of coverage itself is a pretty specific way the proof works. So probably I would say proof of coverage will never overtake the proof of work. Would proof of stake ever take proof of stake would ever take the proof of work? I don't think the Bitcoin is going to change its structure, right, of proving. And given that Bitcoin has by far the biggest market share, for some time to come, proof of work is going to be there. And a lot of crypto participants are going to be very busy with proof of work because they're involved in a Bitcoin. But majority of other blockchains that require some kind of proof of something, it's true, they are moving to the proof of stake, including Ethereum. So in terms of number of projects that use proof of stake, it's definitely already taken over the proof of work. But there are many other proof of XYZ that is emerging, and who knows? I mean, some of them might actually come out even bigger winner than proof of stake. Right now, it seems like proof of stake.
Okay, great. Thank you, Harumi. Some great questions. Thank you. I believe that's all the questions we have for right now.
Great. Okay. Yes, really great questions. And I love having this kind of discussion because, in my opinion, right, you don't necessarily have to fully understand the technology because like, I use a laptop every day, right? But only the thing that I know how to really use laptop is to open it up in the morning, turn on the power, and then start typing using the mouse. That's what I know about the laptop. If somebody, if I drop the laptop one day and then like sort of the laptop cracks open and some parts pop out, I don't know what to do to put the pieces back in, but I still can use PC. So in my opinion, not everybody who's involved in the blockchain has to understand the blockchain technology inside out. But if you are not afraid of the technology and like to get involved, I think that this kind of sort of very starting point understanding that you can have, I think that really helps. And then for the sort of project managers and people like that, especially who have to have a big picture of what is happening out there, I think this kind of and a little bit of everything knowledge is what's required, I think, for us to be involved. So, that's something that I would very much like to encourage you to take interest and then kind of get your feet wet. So I actually wrote articles. I mean, I love talking about blockchain and emerging technologies and stuff like that. So in addition to doing the presentation like this, I also wrote an article a while ago, a few of them, but one of them specifically is kind of talking about this, the top 3 most powerful technologies driving economic growth in the 4th industrial revolution, part 1 and part 2. I released this to Medium. So if you are interested in reading a very simply written article about some of the emerging technologies, please do check out. I actually was very excited writing that one. So, and if you think of any additional questions, this is how you can reach out to me. This is where you can find me. So I am very much, like I said, and I love talking about this technology. I like evangelizing this technology in addition to a few additional emerging technologies, because I think this is where the whole economy is going. And I think we all can and should take a part of where the 4th industrial revolution is going. So I love to continue having conversation with all of you. So with that, Susan, I think the microphone back to you.
Thank you. We did have another question come in. Do you have any recommendations regarding which wallets to use?
Which wallet to use? So if you don't have any cryptocurrency today, I think the obvious place to start is to open up a wallet at some of the exchanges that you have an access to, right? Because, I mean, if you already have some cryptocurrency and thinking about, sending this to DeFi, or maybe I want to put this into this lending platform and stuff like that, then, that's a different story. But if you don't have cryptocurrency today yet, I mean, there are, especially I assume that a lot of people who are online right now live are probably in America. And then there are only so many exchanges that are available for the Americans to be able to utilize because of the regulations that we have in this country. So, research which exchange is available to you. It's also, because it's different from a state to state as well. I'm a New Yorker, so I have even less options than probably some of you who are listening to this presentation. So investigate, research what exchange might be available to you. And then I think, if, like I said, and if you don't have any cryptocurrency today, you don't have too many options but to open the wallet on that exchange and buy some cryptocurrency to start and then see how it feels. Start with just a few dollars. And because the technology works very different from buying equity with the Schwab, or getting a bank account opened with Citibank, right? So I think it's one of those things that you have to try with tiny bit of money to start and see how it feels.
Harumi, we thank you so much for presenting with us today.
Thank you very much, Susan, for letting me do this once again. I always enjoy speaking in front of your people.